Morning, Steve here in Chicago with the morning grain comments. Well, it's USDA report day, and so a little bit later today we'll be a lot smarter than we are right now. But I think the markets have been trading what the government might say today already, with soybeans nearby Jan contract trading below $12, corn kind of holding a little bit above the potential trading range, and the wheat market trying to trade a little bit higher going into the report. USDA said that corn and soybean harvest is almost done. The big thing about the report today is that, number one, more of the corn was harvested when they did the October survey than the soybeans. And so the soybean data, there should be more data on yields that could make the soybean crop change today bigger than the corn. Behind me is a local farmer who has been harvesting his corn crop and putting it in a large truck and moving it into the pipeline system. For the most part, farmers have sold more corn and soybeans to date than they normally do. The basis levels to corn processors, soybean processors are strong based on very good margins, while the export market basis probably isn't as good. But we have seen a pretty big drop in barge freight, which helps the basis. But soybean exports right now are running about 31% behind what the USDA is expecting, an 8% drop. So certainly USDA has the information to lower the soybean export number today. We also note that the South American crop conditions are very favorable with the Brazil crop 61% planted, and the U.S. harvest at 87%. China's imports in October beans only 5 million tons versus almost 9 last year, and hog prices and soybean prices are lower at the Dalian due to lower hog margins. We also note that soybean oil and palm oil prices in the Dalian are lower, probably following the U.S. Lower futures market. And that we note that the rapeseed market in Matif is lower, and we did see Canada prices move a little bit higher, but overnight they are lower. But the canola yield in the canola crop, as far as oil is concerned, is the second lowest in 20 years. U.S. corn exports down 21% year on year, versus a decline of 9%. But the key here is whether or not the USDA raises corn production enough to offset maybe higher ethanol, feed usage, or even export numbers. Wheat trying to claw back with talk about U.S. crops rated 45% good to excellent versus 45 last week. We'll see if the USDA lowers Russia and Canada crop numbers and raises world wheat trade. Again, looking for a slight increase, maybe 30 million bushels in the corn crop, a 20 million bushel drop in the carryout, maybe a 30 million bushel, 35 million bushel increase in the bean crop, a 40 million bushel increase in the carryout, and maybe unchanged in the wheat carryout. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day. Watch the USDA numbers, watch the money flow, and remember, always treat people like you yourself would like to be treated.